Hello, investors and traders, and welcome to the weekly market report. I'd like to wish you a very happy Thanksgiving Day weekend. Here we had a shortened trading day today. The markets officially closed at 1 p.m. Eastern Time on this Friday, November 28th. And we had a very interesting day. The Dow was up. The general markets right across the board were up. Before we get into DIA, I have to talk about the elephant in the room here, which is SLV. Silver was up almost 6%. This is the SLV, also known as paper silver. And if you look at the silver futures, this was up almost 3.5%. And so when you're looking at silver, this to me looks like an official cup and handle breakout, with the brim officially breaking out today on slightly higher volume. Now, that's very interesting because on a shortened trading day like we had today, you normally would see the drop in volume because of the lack of trading overall. But we had a higher volume day, which again confirms the breakout. Now, if you're looking at SLV, and I'm starting off here because there's so many people that trade it, what you do to forecast the price is you take the depth of the cup, which is from the brim to the bottom of the cup, and you take that length and you more or less attach it to the breakout point. So you're talking about the possibility of silver getting up closer to $60 over the coming weeks. Now, I don't think it's just going to go straight up. I think it's going to more or less zigzag up in an ABCD pattern. But we've been talking about silver and the silver miners for quite some time now. Looking at AG, just to give you a glance here, we had a gap up on First Majestic Silver. If you look at Pan American Silver, which is PAAS, you see another gap up with a cup and handle breakout. If you look at some of the copper mining companies like Freeport McMoran, we had a big day as well. This one up almost 2%. And so the momentum to the upside in precious metals and miners continues. Even Bitcoin had a really good day today as it closed over 90,000. Now, we talked about this one on the midweek report, where my Bitcoin hit rate is almost at 100%, with this target right here of 113,302 being the only remaining open target. So if that hits, and I think it very well could, then we will have a 100% hit rate on our Bitcoin forecast over the last 2 years. And so we continue to follow the charts, follow, whatever technical signals you like. I could only tell you about my favorite ones, which down here you can see the CCI is just about to cross over that zero line, which is the black line right there. That zero line also known as the momentum line. So if you get a breakout over that on Monday, we could see at least 2 to 4 more days of movement in the direction of that cross, which again would be to the upside. So going back to DIA, I had a 2-part forecast on this one where we had an upside target that was obviously hit 2 days ago. And we still have a downside target of 455.57. Now, I am keeping that downside target in place. I do believe what we're looking at here in the diamonds is a possible head and shoulder pattern right here with the left shoulder in place, the head right at the very high. And if we get any kind of a pivot, this is going to be a right shoulder, which would most likely bring the prices right back down to the neckline. This is pretty much what the neckline looks like down here. And so we are looking for a pullback. And if you, again, following us week after week, our percentage of accuracy with regard to targets hitting is also very high. If I look at IWM, you can see the upside target has hit. I don't have a downside target until now. We already have, like I said, the downside target established in DIA, but I do believe we're going to see a downside move next week down on IWM to 244.20. Now, some people often ask, well, how do you just come up with 244.20? Well, it's not really me doing it. I'm drawing the line based on past angles like you see back here, and even lengths of those pullbacks. You could see even back here we had a downside pullback down to 234.40, which hit. and then I reversed the target to go to the upside. So we've already hit that upside target, like I said. But I draw the line, and then whatever comes up in that box, you can see the data box there where it says end at 244.20. That's what I go with as my targets. Now, one of the other things that I want to talk about that's going to be released to the general public very, very soon is our 7-point trading algorithm. And what that is, it's basically where we've taken my 7-point trading checklist, and Andrew Faldy on our team, who's the programming guru, put in almost 2,100 lines of code to translate that 7-point trading checklist into an algorithm. So, for instance, if I put IWM in here, it's going to analyze the ticker. So I hit enter, in about 4 seconds that will pop up. It shows you the chart. It shows you the open gaps here in this magenta color. These are the open gaps. And it also automatically shows you the pivot points and the resistance areas. So here's this red line. I did not draw that. The algorithm drew that. And you could see that we have more sell signals than we have buy signals. Scrolling down, you could see that the stochastic is showing a wide divergence here between the K and the D, and we're getting a little bit of a hinge on the CCI. But if you go down, you could see it automatically puts the check marks whether the signals are bullish or bearish. Now, as soon as we get a pivot here, then what we're going to see is another red dot with a check mark next to it is going to show up here. And if we go any higher on Monday, we're going to get another red mark here, which is going to show the wide divergence from the simple moving average. So obviously, as you can see here, the algorithm is showing many more sell signals with 0 buy signals or bullish indications there. So we're going to be releasing this to the public. Our members will have access to it first, obviously, but we will make the big announcement when that time comes for sure. Now, moving on to QQQ, which is basically the ETF for the NASDAQ sector. I had a 2-part forecast in place. The upside target at 613.76 hit on Wednesday. And obviously, the markets were closed yesterday for Thanksgiving, but I have a 2-parter where the downside target is still active at 591.54. So tech is not showing extreme momentum to the upside, because if you take a look here, you're going to see the massive drop in volume. And again, if I just go back to the trading algorithm, you're going to see if I put QQQ in here, it's going to come up pretty much looking much like what we see in IWM. But QQQ right there, again, 4 seconds, it'll pop up, analyze it. And you can see we have a gap above the market here. Volume drop, and looking down below, we only have one green check mark, and that's because we're at a support level that was broken out over the moving average. So in other words, once you break out over the moving average, it turns into support. So that's why it's showing that green. But there's obviously more red than green. IWM looks a lot more bearish than we have here in the Qs, but that's one of the things that you want to look at. The algorithm is going to be used really for finding star favorites and also helping people with managing positions and also managing risk. So in other words, if you have a long position in QQQ and all of a sudden you see the red check mark showing up in the algorithm, then that's telling you, hey, you might want to move your stop up a bit to protect any profits you might have, or maybe even get out of some of the position. That's totally up to you. You say. So again, downside target on QQQ is 591.54. Looking at SPY, again, very interesting. We have pretty similar signals here where we're at a resistance point from here. Last week we did hit that downside target here, and I have not yet put a downside target, at least open on SPY after this target hit on the downside. So I'm going to do that right now. I'm going to put that downside target right back down to the moving average. So the target now to the downside is 674.97. One of the main reasons why I'm putting that slight downside target is because here it is today being Black Friday. the sales numbers are not looking as good as some might have expected. In fact, CNBC reported how Black Friday became a retail letdown, and that's mainly because it's not as much in favor as it once was. And so we're now looking more towards the Cyber Monday or any other cyber holiday that might pop up. But this one came out of Newsweek on the 25th, right before Thanksgiving, talking about how Black Friday spending is expected to fall for the first time in years. Now, they won't get the full impact or the full result of those numbers until after the weekend when they tally that all up. But I think what's happened here in the general markets is that we're getting a lot more optimism in the markets in the recent trading days of the Fed possibly putting in another rate cut in December. Now, you got to watch that because goes back to that old saying, you buy the rumor, sell the news. Okay, the rumor is the Fed's going to have another rate cut in December, but what happens after that cut takes place? Well, I think you're going to have a lot of people selling the news after that is released. And so when you look at SPY, you're looking at the Qs, you look at these more or less these complex head and shoulders patterns that we're seeing up here. There is a real possibility that we're going to pull back and test at least the neckline of a lot of these markets. And finally, if we look at the VIX, we had a two-part forecast on the VIX. It blew through my downside target here of 1968. But if you look down below, you can see that the stochastic and the CCI have bottomed out and they're starting to hinge to the downside. Now, I do have an extreme upside target here in the VIX. Not unusual for me to do this, but I have an upside target of 28.57 on the VIX, which I think is going to go up to test the highs from back here on October 17th. So that's what we're looking forward to next week. Again, if you're interested in the 7-point trading algorithm, I'll leave a link in the description box below so you can check that out. And we're very excited about that. A lot of work went into that. Like I said, Andrew Foley put a lot of time in writing all that code. And this is just the beginning, folks. Sticky Trades is the brand that you want to stay connected with if you're an active trader. We have all the education you're looking for. We have the webinars. We have rapid fire stock analysis. We've got the analysis tools that are now coming out. And we're just doing our very best. I'm very optimistic about 2026. I hope you're enjoying these weekly market reports. If you are, make sure you give us a thumbs up. Put some comments down there. And with that, I'm going to wish you a good rest of the holiday weekend. And we'll talk to you next week. Thank you.